What's going on, everybody? Happy Wednesday. Welcome to Ask Urvin. Today, we're going to take a quick stroll through the market, see what's going on. We just had a couple pieces of news break that I'm sure a lot of people want to take a peep at. Specifically, we got the Fed, and then we got a bit of an interesting move going on in healthcare. So we will take a quick look at both. First things first, I'm going to grab a piece of my screen, share it with you guys, so that we can first take a look at the Fed and effectively what happened here. Pretty straightforward. For this announcement, it was overwhelmingly expected that there would be no change. And shocker, that's about where we're at. We all know that Big Daddy J-Powell is kind of doing his thing. And even though Big Daddy Trump is saying to Big Daddy J-Powell, I want you to lower rates, Big Daddy J-Powell is saying, nah, fam, I'm good. And we are cruising sideways here. And again, that's pretty much what the bond market is dictating. For those that don't know, the Fed Watch tool is a fantastic visualization of this, but literally all you're seeing here is different bond yields and the relationship between yields. So it literally shows you what the reference contract is, and then the spreads. And then that's effectively how we come up with these probabilities. It's not like some sort of magical number. It's literally being taken from the bond markets. And it's like the old, put your money where your mouth is. This is where people are putting their money. And very frequently, you will find this positioning to be pretty accurate. So today, I don't really think that there was any shock to anybody. If we looked across S&P volatility, it was pretty flat throughout the week. A lot of times when we try to see if the market's pricing in anything interesting or has a big news event that it's anticipating, you can use the volatility surface, which is just volatility of different terms and different strikes, to get a sense of how eager the market is around something. And this week, that was actually pretty flat. So nothing super fun so far. What this does, and really what the trader's mind should say, is like, okay, no change here. What's going on in the future? When is the next expected change, and what impact might that have on the market? It's a good question. So another tool that you can use here is under what's called probabilities. And it's kind of what it sounds like. Gives you this cool little plot. It might seem a little bit weird up front. I'll zoom in on it for all those that need spectacles. And you can see what the reference rates are on the top. And it gives you the probability of falling in different rates at different periods. So you can see that for the 18 March expiration, there's about an 88.6% probability that we land at 350, 375. So what I'm highlighting here is we're kind of at the point where we're chilling for a little bit. We don't get to the probability of a cut until about the summer. And you can see that there's a terminal probability of effectively one more cut out in December. We are at the slow end of this curve. Reason why this matters is because if we take a quick look at things like small cap stocks, I'm going to pull up a quick chart that allows you to take a look at the indices compared to one another, because there's some interesting behavior between stuff like S&P and IWM, which is Russell 2000. S&P 500 over the last, 6 months or so? Yeah, over the last 6 months has moved, let's call this 9.4%. Ish. And then if we do that same kind of measurement for small caps, that puts us at 17.9%. What's going on there? Small caps are really sensitive to the rate environment. So there's a lot of excessive pent-up movement in small caps as they've been slowly trying to catch back up where the other indices are. And there's typically performance variances between them all the same. But for effectively all of last year, small caps lagged. Yet if you actually look year to date for this year, small caps are smashing. Right now, year to date, S&P is up like 1.4%. IWM is up 6.3%. 1.4% versus 6.3. Massive difference. That's what's going on. And that's one way to look at the upcoming rate information to try and come up with some ideas. One of them absolutely revolves around this effect. The other thing that I want to pivot to and talk to you guys about quickly is something that I came across in my good old chat with Urvin. And it highlighted some interesting behavior in the healthcare sector. And naturally, healthcare for a while has actually been a stronger force overall. So I'll bring you guys to healthcare down in this little plot. And you can see relative to a lot of the other sectors, healthcare has actually been kind of hovering near 6-month highs comfortably. Yet today it had a fair gap down and an inside trading day that should draw your attention. Question is, what happened in healthcare? And there's a couple key pieces that we identify here. So I will read through some of this for you. The healthcare index fell 1.2%, and the State Street sector XLV that we were just looking at dropped 0.9. So this is showing you across different healthcare healthcare sector ETFs, that it's generally uniform across, but as usual, biotech exhibited some additional volatility. For those that don't know, biotech, that's just how that goes. That is exactly how biotech lives. It lives and dies by a news cycle, getting drug approvals and stuff like that. If you're ever in the option side of the world and you enjoy trading volatility, biotech is typically a good spot to check out, although you're going to be faced with a lot of unfavorable conditions, illiquidity, stuff like that. But there's an opportunity there. There's not a lot of free money sitting around anymore. If you guys find it, let me know, because I would love to pick some of it up with you. A lot of times I spend my time trading really sloppy, ugly things, really kind of being at the bar at like 2 a.m. and you're kind of getting what's there, and that is what it is. It's same story here. You go into biotech and you live your best life and you enjoy it for what it is, not necessarily going to be your future spouse. Next, this is where I thought we had the interesting bit. There's a big focus on calc, which dropped 72%, the old intraday 72% move. So if we look at like 1 year volatility in some of the larger names like Apple over a 1 year time frame, you might find companies like Apple, like total range, something like that. Nothing like the single day 72%. That's my favorite, actually. You just nothing to do there other than if you're right, you're right. If you're wrong, you're in pain. And it says that there was a discontinuation of the phase 2 trial for Oxora. No idea if I said that right. Don't quote me on it, but that's what it looks like to me. I was not hooked on phonics. This is the life cycle for biotech. That's exactly what this is. A lot of times, like I was just saying, companies like this, they get just enough funding to try to get their new drug, their new idea out and hopefully scaled enough so that they can get it approved and then move it to production longer term. But names like this, super, super common. Now, again, from a derivatives lens, I'm always curious about the internals of things. Hey, yo, Lauren, what's up? Great to see you. This is a fun one. So let's take a quick look at CALC. And they were here, in case you didn't know, and now they're down here. The old back to a penny stock, back to square one. And my favorite is if you take a look at the options chain quickly, because one of the fun things that you will find with biotech is a lot of times people kind of know when stuff is going to happen. They have an idea. Here's the funny thing. This is an example where nobody freaking knew. There was a bunch of people buying, and it's all relative. This is still like pennies, right? We're talking call premiums in like $10,000. That just means that the total net premium traded in calls yesterday was 10 grand. In big names, this can literally be millions. So it just gives you some sense of scale. This could be literally one small retail trader that saw an article on Seeking Alpha and decided to go for it. The irony here, dead freaking wrong. Dead wrong. A lot of times when you come in here and you kind of analyze this stuff, you'll actually find pretty good front running. That's very common for things in biotech, but not so much in this case. The last thing that I want to talk to you about with respect to healthcare is if you're some sort of momentum style trader, which is something I talk a lot about, because if you trade, momentum is one of the best possible factors you could at least gain familiarity with to start. And it's because it's really well researched. We know it's there. You're not trying to build something novel. The downside to all of that is you're not necessarily going to make tons and tons of money with a basic momentum strategy, but it's a great starting point. And when you look at big sectors like this that have these big down days, your mind should go to two places. The first one is who's doing poorly and leading the sector down, who's doing well and showing resilience. And I want to show you that really quick. If we pop over and we take a quick look at the healthcare sector itself, all I'm going to do is short a near-term change. And I'm going to see where's the strength, which are in the names that you see here. So ELV, UNH, CVS, Johnson & Johnson, that kind of stuff. And then where's the weakness? The weakness, and by the way, the reason why you're not seeing the name we were just looking at is this is large caps. So this is bigger, more established names. But what I just showed you is exactly how to find the leaders and laggards within an individual sector that's going through a change. A lot of times, there's trade opportunities and trade ideas there for those that are interested. So summarize, Fed, big nothing burger. We're not really looking at anything until about the summer for our next cut. Small caps is a good place to keep your eyes there. And healthcare right now undergoing a pretty good shift, and it's split, biotech leading to the downside, although as usual, there are pockets of strength. So you can find whatever you want. If you want to trade stuff to the upside, there's ideas. If you want to trade stuff to the downside, there's ideas. As always, if you guys have any interest in checking out the tool, we absolutely encourage you. Check it out. It's fun. Definitely still very early stages. Something I like to do is just try to focus on the queries up here. It's much easier to get where you're going versus built out queries. That will come in time. And we also really value your feedback on it. It helps us make it better ultimately for you. And we will see you all next week. See you guys later.